Welcome back. This is part 7 of module 1. In this video, we are looking at circular flow of income in the Indian context. The circular flow of income is an economic model that illustrates the continuous movement, this is the keyword, continuous movement of money and goods between different sectors of an economy. Continuous movement of money and goods between different sectors of an economy. It helps explain how income is generated, distributed, and spent within an economy. The model of circular flow typically involves households, firms, government, and the foreign sector. This is a four sector economy, highlighting the interdependencies between them. The circular flow of income is influenced by the unique structure of its economy, which is characterized by both formal and informal sectors. The interaction between agriculture, manufacturing, and services, as well as significant government interventions. So, everything affects the circular flow of income in an economy. So, these are the four main players: households, firms, government, and foreign sector. This is a four sector circular flow of money. Let's look at the key elements of circular flow of income in India. Households. Households in India, this can be applied to generally to everywhere, but we are specifically looking at India here in this case. Households in India are the primary consumers of goods and services, and the suppliers also of factors of production such as labor, capital, and land. So we have to draw a chart here where we write households, and they are the suppliers. They are the consumers of goods and services. So we have firm here. Firm will supply goods and services. Put an arrow. Goods and services to the household. They are the consumers, and they are the suppliers of factors of production. So they will supply the factors of production. Factors of productions are labor, capital, and land. So land, labor, capital, and entrepreneurship. So household will supply the factors of production to the firm. We have to write here land, labor, capital, and entrepreneurship. And the firms will supply goods and services to the household. And household are the consumers. And they are also the suppliers. So here it becomes consumers, consumes. And here they are suppliers of factors of production. In return for providing labor and other factors, the household receives income. So it receives income. Receives income from the firm. If for land, it receives rent. For labor, it receives wages. For capital, it receives interest. And for entrepreneurship, it receives profit. So it supplies all of these factors of production to the firm. In return for providing labor and other factors, household receives income which is then spent on goods and services. So first, there are the factors of production we have to show. I'll actually show us a graph here, so we can look at it in a more proper manner. So here we have to draw this diagram in the exam. So we have households here, and we have business and firms. First, the household does the consumption and spends on expenditure. The businesses, the business would give wages, rent, and interest and profits, the factor payments. And the households will supply land, labor, capital, and entrepreneurship. So we start initially with the factors of production. that is the land, labor, capital and enterprises. So this arrow we have to draw from one household to the business from on the outside and state it as land, labor, capital and entrepreneurship. This is the first part. The business and firm will give goods and services to the household. The household will do consumption expenditure to the firm, and business and firm will pay for the factor for the factor of production. So let's go back here. So households in India are the primary consumers of goods and services and the suppliers of factors of production such as labor, capital and land. So they will do the consumption here, and they're also suppliers of factor of production. Suppliers of factor of production such as land, labor, capital and land, labor, capital and entrepreneurship, and consumers of goods and services. In return for providing labor and other factors, household receives income which is then spent on goods and services. Because they have given land, labor, capital and entrepreneurship, the business gives them wages, rent, interest and profits. So these both are on top, connected together on the top, and at the bottom it does it basically business and firms flows of goods and services goes to the household, and household spends for the consumption expenditure and gives it to the firm. So we have at the bottom this kind of chart. So now let's draw this chart on a separate page here. Okay, so we can create household, and here we can create firm or business. These are two factor. So one, we have to do it like this, from here to here and from here to here. This is the factor of production. Okay, let's look at the graph again. Here is the factor payments which goes from the business. Okay, so we have drawn the wrong chart. Let's do that again, so you can practice along with me. So from the first, it comes here. This is the factor payments. For the factor of production, it supplies land, labor, capital and entrepreneurship. Land, labor, capital and entrepreneurship, and firm business will pay for it as a factor payment. For these factors it will pay to the household. Okay, we have to also put the arrows. So this is 1, this is 2. Okay, now the household, once this is done, business or firm will supply goods and services, supplies goods and services to the household, and household, they have to, the flow of goods and services, that is supplies goods and services, and then they spend on consumption and expenditure. And expenditure. Okay, so this would be the, all right, so this will be the third one and this will be the fourth one, because when they want to do consumption, then only they will produce goods and services and give it to the household for consumption. Okay, so this is a two two-factor flow of chart, circular flow of income chart for two factors. Alright, let's see if we have missed anything else. The circular flow of income in simple two-sector economy. Okay, so this is a very simple chart, and then we can expand on each one of them. That is, household, supplies, factors of production to the business or firms. The firms pays for these firm gives factor payments to the household in terms of wages, rent, interest and profits. The household consumes and spends and does expenditure on items supplied by the business and firms in terms of goods and services. So we can expand on that. In return for providing labor and other factors, household receives income which is then spent on goods and services. So we see here income is given, wages, rent, all of that, and then it spends and consumes that. Again goes back to the business firm. All this profits and everything which is paid by the business to the household, that is again spent on consumption and expenditure, by which the goods and services are given to the household. According to the National Statistics Office (NSO) in 2021, household consumption expenditure in India was approximately 62.8 trillion rupees, contributing significantly to the economy's total demand for goods and services. So household consumption was 62.8 trillion in 2021 as per the National Statistical Office, contributing significantly to the economy's total demand for goods and services. This expenditure includes expenditure on food, healthcare, education, and durable goods. Labor is a critical factor for households in India, as approximately 42% of the workforce, that is around 400 million people, is employed in agriculture, about 25% in manufacturing, and the remaining in services, which include IT, retail, and other service industries. So 42% of the workforce is in agriculture, 25% in manufacturing, and remaining in services. So one of the factor of production was labor. Firms, producers. Firms are the producers of goods and services in the economy. They purchase factors of production like labor, capital and land from the households, and in turn produce goods and services that are sold to the households, government and foreign sector. So we can see that in that circular flow chart. India's corporate sector has shown substantial growth, especially in services and manufacturing. In 2023, India's GDP stood at 274.4 trillion rupees, with services contributing around 55.39%, followed by industry, manufacturing and construction at 26.27%, and agriculture at 18.34%. Firms, particularly in sectors like information technology, IT, pharmaceuticals, and automobile manufacturing, play a crucial role in both domestic production and exports. So, service sector contributes 55% to the GDP of India, uh, 26.27 by industries, that is manufacturing and construction, and 18% by agriculture. Large firms like Reliance Industries, Tata Group, Infosys employ millions of people across sectors and are major contributors to the national output, interacting with the households through the factor and product markets. Government. The government plays a significant role in the circular flow of income in India through taxation, public spending, and welfare programs. The government collects taxes from households and firms and redistributes income through public expenditure on infrastructure, subsidies, public services, and welfare schemes. Let us look at the three sector economy. circular flow of income in three sector economy. This is a three sector economy. In this we have household and firms as usual. The household provides the business. Okay, the household provides factors of of productions factor of productions to the business firms. The business pays factor payments for these factors in terms of wages, rent, interest, and profits. We can have two arrows like this, from here to here, and then again from here to here also. And this is the consumption expenditure on goods and services. So they have clubbed it together both ways, but it should be two-way arrow, otherwise we keep it separate. So consumption and expenditure will come here, consumption and expenditure will come here. Okay, and supply of goods and services by given by the firm here, and as in the previous graph, this will come here. Okay, so from business firms, goods and services will go to the household, and household will consume and do expenditure on these goods and services. Okay, so once this is done, now we have government also in this. Okay, households can also do financial market savings, so they will do savings, and financial market will give give loans, and businesses will do borrowings from the financial markets. So there is this flow also of financial markets also in between. Now, if the government comes in at the top, so net tax payments will go to the government. Businesses will also pay tax to the government. Government will give wages and salaries to the household, and government purchases of goods. Government purchases goods from the business and firms. Okay, both will pay to the government, and government will also spend on wages and salaries, and government will give subsidies or give exemptions and all of that to the business and firms. This is a flow model chart with government. Okay, now we also have four sector. This is the four sector which includes government and foreign sector. But before this, we'll do the graph of this. So we'll start again. We'll just practice. So this is, maybe I'll just type it out so it's better. Households. Okay. So there is households here, and this is firms, businesses. Okay. Households and firms. So let me do a rectangle only. Okay. So we have one from here to here, and then from here to here. Okay. Should we do it the other way around? So basically, household supplies, factors of production. I'll just write it down. Factors of production, which includes land, labor, capital, and entrepreneurship. Okay, land, labor, these are the factors of production. For this, the firms will give factor payments. Factor payments will be what? It will be exactly from the top. So for land, they'll be paying rent. Labor, they'll be paying wages. Capital, they'll be paying interest. and for entrepreneurs it will be profits. Okay, so this is the second part of it. This is the relation. Okay, now once this flow happens, so this is number 1, this is number 2, now 3. So now the business and firms will supply goods and services. So let me just goods and services supplied. So the business firm supplies goods and services, and the household does consumption and expenditure. Okay, so now once this is done, we will introduce government also in this. So government will come here. So government will be two ways. So both will pay taxes to the government. So taxes. Both will pay taxes to the government. Net tax payment. So it should be net tax payment. Okay. Net tax payment. Okay. Now this will be 1, 2. This will be 3. And this will be the fourth one. Okay. Fourth one. And this will be fifth one. This will be the sixth one. Okay. And now government will also do something for them. Okay, what will the government do? Government will pay wages and salaries. The example, wages and salaries. And here government purchases of goods. Government can purchase goods from firms and businesses also. So once this is done, we are complete with the, okay, we also have in between financial sector. So households does savings, and financial market will do investments. Okay, right, now we can expand on this diagram. We also have fourth one, in which there is a foreign countries are there. So the business and firms, they are from the foreign country. Foreign countries are exporting to this business and firms, and businesses and firms are paying for this imports. Receipts from exports. Okay, foreign countries are receiving, and they have done, businesses and firms have done payments for the imports. Alright, and foreign countries are receiving for their exports to the business firms. Now foreign remittances from foreign countries, money is coming to the households in terms of foreign remittances, and from households there is export of manpower. So this is the 4-factor circular flow of income in an economy. 4-sector economy. 1, 2, 3, 4. And financial market will remain. Borrowing for investments. Okay, now let's come back here. This video is rather becoming long. All right. The government plays a significant role in the circular flow of income through taxation, public spending, and welfare programs. So we can write taxation, public spending, and welfare programs. The government collects taxes from households and firms, correct, and redistributes income through public expenditure on infrastructure, subsidies, public services, and welfare schemes. In 2023, the Indian government's tax revenue, both direct and indirect, amounted to 22.9 trillion rupees, primarily from GST, that is goods and services tax, corporate tax, and income tax. Public spending is also a major component of the circular flow. For instance, in 2023, the union budget proposed 39.45 trillion rupees for government expenditure, including infrastructure projects, healthcare services, education, defense, and subsidies for agricultural sectors. Welfare programs like PM Kisan, Pradhan Mantri Kisan Samman Nidhi, transferred 1.8 lakh crore directly to farmers' accounts in 2023 to support agricultural income and consumption. Foreign sectors, exports and imports. India's interaction with the foreign sector plays a crucial role in its circular flow of income. The foreign sector comprises the exchange of goods and services and capital between India and other nations. India imports goods and services like crude oil, machinery, and electronic products, while it exports services, mainly IT and business process outsourcing, and commodities like textiles, gems, and jewelry. Exports from India reached approximately 28 trillion rupees in 2023, with key sectors including IT and software services, pharmaceuticals, textiles, and engineering goods. On the flip side, India's imports amounted to around 43 trillion in 2023. So we are importing more than what we are exporting, with significant imports of crude oil. Out of this, major is the crude oil. India is the third largest oil importer globally. Machinery and also electronics, other significant imports other than crude oil. Financial institutions. Banks and financial institutions facilitate the movement of income in the economy by providing loans, credit, and investment opportunities. They connect the household and the firms by channeling savings into investments. We saw that in the diagram. Financial institutions in India play a critical role in economic development by promoting savings and investments. As of 2023, India's as of 2023, India's banking sector had over 12,000 banks and financial institutions, with State Bank of India being the largest in terms of deposits and lending. 12,000 banks. The banking system facilitates the flow of capital from household to firms. We saw that in the diagram. Savings and borrowing for investments. They will invest it with business and firms. The banking system facilitates the flow of capital from household to firms, aiding in investment and growth. The stock market, primarily the BSE NSE, also plays a key role in this circular flow, offering investment opportunities to households and firms. Okay, circular flow of income in practice. Let's illustrate the circular flow of income using the example of Indian manufacturing sector. Households supply labor to firms, earning wages in return, correct? A factory worker employed by a company like Maruti Suzuki receives wages which they use to purchase goods and services. The firm, Maruti Suzuki, pays for these factors of production, produces cars, and sells them in the market. The company generates revenue from selling vehicles to consumers, households, or other firms. The government collects taxes from Maruti Suzuki's profits and from the workers' income. It uses these taxes for public expenditure, including infrastructure projects, healthcare, education, and subsidies for sectors like agriculture. In the foreign sector, Maruti Suzuki might export cars or automotive components to other countries. This brings in foreign income, which flows back into India, benefiting firms, households through wages and the government via taxes. Household, Households use their income to purchase goods and services from the firm, creating a continuous cycle of consumption, production, and income generation. This process helps sustain the economy, driving demand and output in all sectors. Let us look at the leakages and injections in the circular flow of income. In the real economy, there are leakages and injections that impact the flow of income. Leakages are in the These are the factors that reduce the flow of income. Common leakages in India include savings. When households save part of their income instead of spending it, taxes, the portion of income paid to the government, and imports, when income flows out of India to purchase foreign goods. These are all leakages. For example, India's saving rate was estimated at 30.8% of GDP in 2023, meaning that a significant portion of income is saved rather than spent on consumption. Injections. These are factors that add to the flow of income. Injections include investment, government spending, and exports. For instance, the Indian government's spending on infrastructure, such as the PM Gati Shakti National Master Plan, injects income into the economy through public works and construction projects. In 2023, the Indian government allocated 20,000 crores to infrastructure development projects, directly injecting money into the economy. To conclude, the circular flow of income in India operates through a complex network of interactions between households, firms, the government, and the foreign sector. Each sector plays an essential role in ensuring that income generated from production is distributed back into the economy, driving consumption, investment, and growth. In India, the role of government spending, exports, and domestic consumptions are crucial to sustaining economic activity. However, the presence of leakages such as savings and imports can influence the flow, which is balanced by injections like public expenditure and exports. As India's economy continues to grow, the circular flow model remains a useful tool for understanding the movement of income and the interconnections between different sectors of the economy. Thank you very much for listening. Do consider subscribing and sharing the link with your friends and in your college group. Take care. Bye bye.